Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond over at the Contrarian Trader. And what we're going to go over tonight as the futures markets open up, we'll watch it for a moment. We'll go over a couple of an interesting chart of the best investment of the past decade. And I guess it's not surprising. ARL, MC, and HNY. Are those symbols? We're also going to go over a chart, not a chart, a story on Zero Hedge. It's really more about Jeff Gundlach. He's worried about the corporate debt market, and that's a big problem. So we'll talk about that for a brief moment. We'll talk about the economic data that was released last week, what's being released this week, and then of course we will talk about some of the charts that we're watching going into the new trading week and the futures. You always do that to me. That's amazing. Merry Christmas and a Happy New Year to you too. Very good, Arlo. Outstanding. You get me every time. Uh, so let's get to it. As we allow the futures markets to settle down here a little bit, let's bring up a. I'm waiting for more people to come in here, so I'll go to the best investment of the past decade in a moment. So we'll kick things off with the economic data that was released last week, and some of it was good. We had some strong payroll numbers, but we also saw a lot of spending. Spending was increased, personal income rose, and for the most part, the bias was to the upside in terms of the economic data, allowing the market to really melt up last week. Now, this coming week, we have the Chicago Fed National Index, the durable goods numbers, important number. That can move the market if you have a big miss or a big beat. The durable goods, if you're not familiar with what that is, durable goods are items that are manufactured and last several years. Those are your washing machines, your dryers, etc., things of that nature. Hey, Richard, how you doing, sir? Welcome. Happy Sunday. So we're not going to have a lot of economic data this coming week, and it really doesn't matter. Seasonality, with the exception of last year, seasonality favors bulls this time of year. To go short in this market would not be the wisest thing to do, unless, of course, you had a real serious reason to do so. I mean, last year, the reason why the markets were melting down was because you had the Federal Reserve that just didn't get it. They were rolling off debt off their balance sheet, and they said it was on autopilot. They gave the markets no hope of a life preserver. And I'm not saying that they were wrong for doing what they were doing by trying to normalize rates and reduce their balance sheet. But unfortunately, the current modern day investor is a junkie. They need heroin injected into their veins to keep the patient alive. Hey, Eric. Welcome aboard. Happy holidays to you. So that's what we were dealing with last year. We're not dealing with that this year. So to go shorting this market right now, while there are reasons to do so, I don't think would be the wisest move to make at this point in time. There's going to be a great trade to the short side. Now is not the time. But more to come on that front. So let's take a look. You bet, Eric. Let's take a look. Jeff Gundlach, this guy's a smart guy. One of the few people that I really have a lot of respect for. And it doesn't hurt that he's bullish on gold as I am. But his big concern, corporate bonds. And the problem with corporate bonds is that it's very similar to the financial crisis. You have certain bonds out there that are rated A or a double A, whatever, and they should be rated C. They're junk bonds, but they're treated as if they're they're a high quality bond. So this is, here it is. In the near term, he said, at the end of the curve is heading up. Big problem. Steepening of the yield curve. And the yield curve will steepen until the Fed decides to implement large-scale asset purchases. Now, this is going to be beneficial to the markets. Hey, Patrick. Well, Christmas caroling in Connecticut last night. I'll send you a video. All right, cool. Cool. You know, Patrick, I ate all of the venison breakfast sausage that you made me. It was outstanding. Outstanding. It was good for my low-carb diet. Richard, we'll take a look at SPY for you, okay? And, oh, by the way, for members, I'm going to do a members in a group private session at 7 p.m. Eastern Standard Time. Get your symbols ready. That's where I open up the mic to members. Members take the stage, and they ask me the questions that they want answered of their charts, not necessarily my charts, and I give them my opinion, give them ideas, and we work on through it. So it's really an opportunity to engage with members. Anytime, Richard. It's really an opportunity to engage with members one-to-one, and I get a blast out of it. Just a really good time, and time well spent. Thanks, Patrick. I really appreciate that. Oh, and by the way, Patrick, my wife, she makes a really good, she makes nachos really well. And so we didn't have chopped meat. She used some of the venison meat that you had given me. I don't know whether it was medallions or which one it was, but she used that in place of beef to put on top of the nachos with jalapenos and cheese and whatnot. Outstanding. Outstanding. It was really, really good. So that was delicious. For those that aren't in the know, Patrick brought me down. He's a member, brought me down a ton of venison meat, sausage, breakfast sausage, medallions, all sorts of stuff, and it's been getting put to use. So thanks again, Patrick. Really good stuff. Okay, so we have a problem with corporate bonds, and what Gunlach is saying here, and this is the reason why I believe he's so bullish on gold, is that at some point in time in the very near future, the Federal Reserve is going to have to do this. They're going to have to stop this. Watch. This is the 10-year bond. Yield. Not the price, but the yield. Weekly chart. This cannot be allowed to continue. We are breaking out. We have broken out of a downtrend channel. We were moving higher last week. We put in a new weekly high. We closed at the highs of the week. This cannot last. It can last for a while, up until the mid-twos, and then you're going to see the stock market go like this. It's going to buckle. You're going to see volatility spike. And 3% was the former number back here, this time last year, where you saw November, close enough. You saw a 3 handle on the 10-year yield. And what was the stock market doing? We'll make it blue. Stock market was rolling over. We were going through 3% on the 10-year yield, and the stock market just threw up all over itself. That cannot be allowed to happen. To allow these yields to move up higher is to kill the stock market. At some point in time in the very near future, the Federal Reserve is going to have to intervene, and that's what Gunlach is suggesting here. The Fed decides to implement large-scale asset purchases, and they're already expanding out their balance sheet. I mean, if you take a look at, this is off their own website. Here is the Fed balance sheet pre-financial crisis, about $800 billion. Now, look at it. 4 trillion, 137 billion. This is since September. This is their Fed's balance sheet. But these are bills. Treasury bills, very, very short term. They need to start buying longer term coupon bonds, 10-year, 5-year, 30-year bonds to drive that yield lower. And that's when you're going to see gold rip. You're going to see the dollar tank. And that's the play. So that's my tale of woe. All right, so we have a bunch of people in here now. The best investment of the decade. Why don't everybody just pop it in here? What symbol or what investment was the best investment of the decade? And you can drop it in the box, and let's see who's right. And while I'm waiting for that, and it could be anything. It could be an individual stock. It could be an ETF. It could be real estate, whatever you think it may have been. And while I'm waiting, Richard's got Apple. Okay. RL's got gold. Okay. We'll wait for a couple more to come in. I'm just going to take a quick peek while everybody's populating those. Take a look at the dollar. The dollar is pulling back some. Strong week last week for the dollar. Very, very strong. And that kept the lid on our gold trade. But you can see as we're opening up this week, we're pulling back down below the support level. I mean, this is on very thin volume right now. So we'll see how we open up tomorrow morning. Blockchain's got Bitcoin. Okay. All right, so let's go through it. We'll come back to this. Blockchain takes it, man. Here it is. World's biggest companies versus Bitcoin the last decade. Bitcoin, $100 invested. $9.2 million it would be worth today. Amazon would be worth, wow, that's it? That's not much. 3,300, Apple 2,400. But interesting, Bitcoin blows away any other investment considered in our chart. If you had invested $100 10 years ago, you'd have $9.2 million today. Amazing. Huh? And Bitcoin, oh, be careful of Coinbase. I invested, I did a wire transfer into Coinbase on the 16th or the 15th, last Saturday. When was that? The 14th. The 14th. And I checked my bank on the 16th and validated that they had withdrawn the funds. It was a successful transfer. I got an email while I was out shopping yesterday, and it told me that the transfer was unsuccessful. This was an email from Coinbase. The transfer was unsuccessful. They would attempt to re-debit my account today. And that would have caused all sorts of fiasco. And I wrote them last night. They did send me an email today saying that the transfer was in fact successful. But be careful. Just watch out. And I really won't use Coinbase again because the commissions are ridiculous. And I won't go with Robinhood. What just happened with them? If that's accurate, I'm not sure whether it's validated or not. Whether or not that they've been front running their customers. That's a terrible thing. That's stealing. That's a horrible thing. There's a company out there called Webull, and I'll probably investigate them a little bit and have commission-free trading on Webull. So more to come on that front, but a little bit of just a little heads up on Coinbase. I didn't like that at all. So congratulations, blockchain. You are the winner. And I kind of misled you on the question. RL there. I said gold and real estate. I really wasn't accurate. It was a large company stock and versus Bitcoin. So my apologies. Okay, let's go to the futures. All right, we already went over the dollar. It's pulling back here a little bit. Let's take a look at gold. Gold was setting up nicely, despite the fact the miners had a fairly weak week last week. Pardon the pun, I guess. Gold consolidated very nicely. And in fact, it broke out above this upper band of resistance on Thursday, and it's been bouncing around ever since. On Friday, we closed the last 4-hour bar out with a bullish key reversal. Nice. We are off the highs of the session thus far, but we are up at current. So gold is setting up nicely here. Let's take a look at silver. Silver had a very good week last week. It was up. Our silver leveraged ETF trade was up about a little over 3.75% on the week. So a good week. It outperformed gold, and we are seeing silver up yet again. So silver looking good. We'll have a little bit of resistance up here at 17.38. These are all 4-hour charts. We're just looking at how the futures are opening up here, and it implies how we may open up tomorrow morning. Let's take a look at natural gas. I know, Patrick, this is one for you. Yeah, we are down on natural gas, big. Yeah, you're right, Patrick. And this is what I was concerned about. I mentioned this on swing trading today a couple of times last week that, we were coming off of an oversold condition. And many times when you come off of an oversold condition, you get that dead cat bounce and you'll rally, but you rally up and into an ascending wedge formation. You'll hit the prior support level, and then all of a sudden you just roll over, because this is basically investors that are in denial. They're refusing to accept the gap down, and they're hoping that they're going to get back to even, and it doesn't work that way. And you can see that we failed once, and we're failing yet again. So this is not setting up well for the new trading week. Moving on to, let's take a look at, good, Patrick, I'm glad. Good. Let's take a look at Bitcoin. Bitcoin gapped up. It's been up most of the weekend. Let's take a look at it on a weekly basis. And my screen just froze. All right, there it goes. Okay. So we have a new weekly high. Good stuff. Real serious resistance going to come in around 7,900, around there, because this upper band of resistance, which is at current at around 8,000. By the time we get up there, unless we really shoot up quick, it'll be around 7,900, and that'll mark an area where you'll see some traders take some profits on Bitcoin. RSI is looking really good on a weekly basis here. So Bitcoin, back to the 4-hour chart, looking very good moving forward. I don't plan on adding any more to our position until we begin to break out above this upper band of resistance. And once we do that, I'll be satisfied with the fact that we do have a sustainable rally on our hands, and that we could go adding more to our position. But it won't be with Coinbase. It'll be with a brokerage that has no commissions. So, I mean, the commission I paid was about $75. I went back and I checked it out on Coinbase. $75 ticked me off, and I have to pay that on the out again, because I couldn't transfer. I did open up an account prior to the news coming out from Robinhood. I opened up an account with Robinhood, and you cannot transfer cryptocurrencies into Robinhood. So I'll check out Webull. I'll let you know what I do as things unfold. I'm going to try to avoid that commission if possible. So I'll let you know if I'm able to do that. So that way, if you're with Coinbase or another alternative, that we try to get you over into a commission-free brokerage. So more to come. All right, so Bitcoin looking good here. We'll save the stock market futures for last. Josh, Voyager commission free, I believe. but you do not trade crypto. Thanks for that, Josh. I'll check it out. Thank you for that. This is the value of live stream. I mean, going back to just simply doing recorded videos isn't even an option anymore. Just a live stream, just the live interaction. I love the heck out of it. Unfortunately, I use a self-imposed deadline of like 15 minutes to a half hour tops of these live streams, and I usually go an hour. I have to cut myself off. So I speak way too much at times. Sorry. So, but thanks for that, Josh. Appreciate it. Let's take a look at copper. Copper's in the consolidation range. We had a failed breakout last week. We broke out on Thursday, Friday, breakout point failure. Expect more weakness here on copper. Expect a minimum retest of this lower band of support. And the reason why I'm looking at the charts of commodities, it's because on Thursday, I did some analysis I shared with Visitors Live about inflation and how it correlates with Bitcoin. And you're seeing inflation across the board in the commodities sector. And of course, the Federal Reserve backs out commodities out of, or I should say food and energy, out of their, look at this, corn, ripping. But this doesn't matter. There's no inflation. They back it out of their inflation metrics. They use a core number. Sugar, I can't get sugar on Thinkorswim anymore. I don't want to bore everybody here. I just find it curious how commodities are moving up higher, and yet there's no inflation. All right, let's move over and into, I want to check out the euro. The euro's getting clubbed, no shock there. Brexit's on the way. The yen's a little bit weak. Oh, we had a breakout point failure here. This is a bull trap. We broke out, consolidated, failed to hold it. That's fairly bearish for the yen. And that's pretty bullish for the dollar. Coffee's been moving up. Do I have coffee here? Yep, I do. They're not going to let me. Thinkorswim got cut out of a couple of feeds. They don't subscribe to them anymore. So I can't bring up the coffee future. I can bring it up on Thinkorswim. Not Thinkorswim, on stockcharts.com. Let's go over to the stock market futures. I suspect that the week is going to be an up one. The S&P 500 is up at current, about 1.5 points. We're becoming a little bit extended here, but this can go up higher. We have RSI at current at 73.73. Let's take a look at the Russell. The Russell pulled back a little bit. The pause that refreshed. The Russell closed out the week last week at a resistance level. It has been lagging. It's been doing well of late. But the Russell has not broken out to new all-time highs, as have the large caps. But I suspect they'll try to have a go at it this week. So the Russell holding in there. It's going to be a very light volume week. The computers are going to be keeping this market in check. I'm not expecting much at all this week. The NASDAQ. NASDAQ's up nicely this evening. No new weekly high yet, but we're very close. Take note of RSI 4-hour basis. We're at 78, very overbought. For an index, very, very overbought on a 4-hour basis. That doesn't mean to sell, doesn't mean to go short. It just means raise your stops because we're going to get a sell-off probably after the first of the year. Let's check out yields. Well, the bond price, not the yields. So the 10-year yield, 4-hour basis. You can see that this 20-period moving average in blue is acting as resistance. Now remember, I showed you the chart earlier of the yield and it putting in a new weekly high and closing at the high of the week last week. Again, the market's going to absorb slightly higher yields from here, but once we go up into the mid-twos, you're going to see the markets begin to buckle. And at some point in time, the Fed is going to have to step in and start buying up longer dated maturities. So it's going to be interesting to see when they start doing that and whether or not those purchases are going to be out of Luxembourg or somewhere else, whether they'll try to cloak them like they've done in the past. So watch the 10-year bond price. We have broken out slightly out of this downtrend. We've just stopped going down. Now we're consolidating sideways. We do have a higher low here, but no breakout to the upside. So essentially lethargic trade. But once we start breaking out and above, we attempted to break out. We failed. Once we start breaking out and above this upper band of resistance here, yields will come under pressure. Then you'll see gold, the miners, silver, they'll catch a bid, and the dollar will probably come in, helping those commodities move up higher. And Richard wanted the spiders. Let's take a look at that. And then members will segue over and into the Members in a Circle group, and we'll turn it over to you, the open mic. For those that are just joining in, the open mic night for members in the members intergroup circle is where I turn it over to members. They ask me the symbols they want me to review. If they have questions about the stocks we're watching for the coming week, we'll go over those. And it's really great interaction. I get a lot out of it. So I will issue a replay tomorrow morning of tonight's Inner Circle. And this symbol, before I go to the spiders, I was talking about this one on, this was a request on, I believe it was Thursday evening. And at that point in time, this is NBIX's symbol, Neurosciences. And we were trading below this lower band of support. And I wish I had the recording. I said, if we rally back, I would hold on to the shares or I would entertain opening a new position. And in fact, we did rally back to close back above this upper band of support. So this chart's looking a lot better than where it was looking or how it was looking when I reviewed it on Thursday night. And you can see on Friday, we broke out above, on a daily basis, above this upper band of resistance. So NBIX looking good. All right, Richard, you wanted the spiders. Mila, how you doing, brother? Welcome. All right. So, spiders, I mean, what can you say? This is a monthly view. A bullish key reversal on the month. It's a beautiful chart. It's extended, yes. But we still have more fuel in the tank. Several months ago, I put out a target. It was on the one of the webinars I did with TrendSpider, and I was asked my price target on the S&P 500, and the markets were weak at that point in time. I said 3,300, and I was asked why was I so bullish on the market when it was weak at that point in time, and I said it's because of the election. The elections will be the reason why the markets remain strong into 2020. We'll probably get a pullback here and there, no doubt about it, especially after we come out of this Christmas season. We're a bit extended here. We'll probably get a pullback early on in the year. It'll probably be the pause that refreshes, and we're going to wiggle up to that 3,300 mark. I'm fairly confident. Looking at RUBI. What RUBI? Is that a stock symbol, Mila? Okay. So that's the monthly chart. S&P 500 path of least resistance is clear to the upside. If ever we were to break back down below the support level, that's a critical breakdown technically. Weekly chart. We closed slightly off the highs of the week last week, but we closed well off the lows of the week. RSI moving in the right direction. Still more fuel in the tank to go here. A little overbought. We closed out the week at 72.69 on RSI. We're flatlining on Stokes. So again, I think that we're going to finish out this year fairly strong. January, different story. Daily chart. An outside reversal day on Friday. You saw RSI come in a little bit on Friday. So just watch for a potential beginning of a divergence between price and RSI. You want to see RSI validating an upward move. This is a 4-hour chart. A little bit of selling into the close on Friday, but not much. I think the path of least resistance is still to the upside into the year end. I will go over a couple of more here because I'm running over in time. Rubicon, RUBI. All right, so this is the value of TrendSpider. You know, you look at this chart without the automated trend lines, and it's still a pretty chart, but you wouldn't realize until you click here that we closed right at resistance. So I like the chart. I think in all probability it's going to move up higher. But what may happen here first is that we pull back and do a retest of this breakout point. So what I would do here, I would create an alert. Possible. Okay. And I would fire it off on one 4-hour bar on a retest of the support level. And we're good to go. Now, what I would also do here is overlay monthly trend lines in dash line. So in all probability, if in fact we pull back, see a continuation rally, we're coming up here to 9.96 per share and declining. It'll probably be a little bit lower than that before we hit resistance or when we hit resistance. But I like the chart. I think it looks good. But just keep in mind, you do have resistance above. The best risk-reward entry point if you're looking to enter, pull back, do a retest of the breakout point or the support level here. That would be a good one to set an alert at. I'll send this over to you. And if you guys like TrendSpider, there's a link below in the description area. And you get 25% off. Just use my discount code. Yes, I have a partnership with them. All right. STNE. I'm just going to go over the weekly charts here because I'm running out of time. If you're a member, I'm not sure if you're a member, just come into the inner circle and I could spend a lot more time there. All right, so you're in a triangle formation right now. There is support below. Let's first do the automated. No monthly resistance levels. If we break support here, you do have a support level right here. If you break support, you're going to come down here to at current 35.64 on price. That would be a good entry point. You want to put your stop right below there. And if you get a breakout above this upper band of resistance, that would be a good point to open a position. STNE. All right. We're good. Okay. And that is all she wrote, folks. Members, we're going to go over into the members in the circle. If you're not currently a member, that's fine. Just please follow me on YouTube. And if I could ask you to give a like, I'd really appreciate it. It helps me out with the YouTube algorithm. And if you want to get alerted 15 minutes prior to us going live, there'll be a link below in the video description area or on the website. Enter your email address on the 15-minute alert opt-in email list. You're not going to be spammed, and you'll get an alert 15 minutes in advance of me going live. And that is it for this evening, folks. Folks, please, everybody have a very, very Merry Christmas. Happy Hanukkah. Happy New Year. Thanks for spending a moment of your Sunday evening with me. I know your time is precious, but everybody have a really safe and happy holiday. God bless and be well.